Good morning, guys. Welcome to Friday, January 10th. Thank God it's Friday. It's been a short week again. Yesterday was kind of an odd day. But a few calls from people who kind of forgot about it, wonder what happened. Everything stopped working. But the day was fairly eventless. It's kind of a sideways kind of a day, back and forth a bit. Today, though, we'll see where we're going to go. News-wise, today we get the employment situation. We're waiting for that report. That's a big one for the week. So at 8:30, we get the employment situation. At 10 o'clock, consumer sentiment. And that's so I think it's going to be pretty crazy here in the morning at 8:30. We'll see how this whole thing shakes out. But I also loaded up my machine. I have a bunch of additional stuff I'm running just to do some testing. And so it's maybe a little bit sluggish on my performance on the machine today. We'll see. I'm going to be watching it. But I'm going to start off. If you look at the ES, so we've got the employment situation coming out at 8:30, then we get the consumer sentiment at 10. But looking at this move this is the Wednesday move, they were to the downside. We were down here flirting with the 59.15s. A little baby day here holding. That was yesterday. And pretty much pretty much been holding here towards the low end of this range. So I'm kind of concerned that we may see some further pressure to the downside. I mean, beginning of January started off with a little buying, a little bit of a rally, and then we started seeing a little bit of weakness, and it looks to me like we may see a little bit more of that. Um, so at least that's what the structure is kind of telling us. They haven't been down here 3 times now, holding around towards the lower end of the range. Now, if the support holds, the natural reaction would be trading back up to the 75s, maybe even back higher. But I would be looking at this support there, 5900 to 5910, 10 to 15s. That's your key area to watch. If that comes out, bets are off, and we are probably heading lower, and then probably get a little bit more of a pile-on effect to the downside. So initially starting off range bound, I'm looking for early weakness to get long for rotations back up. That's kind of what I'm looking for. If I start seeing early strength and then weakness towards the afternoon, and that would be a pretty good signal that we're going to see further selling going into the next couple of weeks. So that's kind of the dynamic we're starting off with. Employment situation could change everything. That dynamic is going to be interesting. If the reaction is directional, then we look for a news day trade and start and look for a continuation in that direction. If it is not directional but volatile, then we'll go back range bound and lean back on this analysis. So directional means something like this, but much bigger. A big bar like that, and here you have a good example of a balance bar. So you have a big reaction to the downside in this bar at least. A little balance bar forms, and the news day trade is just taking the direction you come out of this bar. Now, this bar is not a great example, but it's a good example of a big balance bar, and then you had to take a direction. Now, the direction was to the upside on this bar to get started, and then they ran it lower and net to the upside. So more than often, this reaction works. This is unfortunately stuff you can protect yourself a little bit of volatility in between like this. If you're in a newsday trade, that kind of volatility when they absolutely run it back and forth like that, it usually doesn't happen that often, but it can. So the initial reaction is the one you want to take, and then see if you can stick with it. Now, my stop should be on the other side of that balance bar. So in this trade, if it starts trading higher than lower, you should be out of that trade, you know. But that's kind of the setup for a newsday trade. But if it's volatile but not directional, we'll just go back range bound and look for early weakness to get long against this 35s, the 25s, and the 15s for rotations back up. If they take out the 15s, we still have support all the way down here to the 58.95 to 5900. I haven't put in a level here just yet. I don't have a good level for it. Let me see. No, I don't have a good level for it. So it could be a support area in between here. I don't know. It's we have to see how the day develops. But if they start taking out the 15s, I would stop looking for buying opportunities very aggressively. I would be looking for continuation to the downside at that point. There's still support here though. So I mean they could run it down to the 58.95 and then stall and trade back up again. So it's still support, but I would be a lot less aggressive buying it if to take out that 59.15 level. So that's kind of the dynamic to get started. And if they start trading up above the 59.60s here, take off the long bias, the short bias, and just go back range bound. So looking for early weakness. It's not necessarily short bias. I'm just looking for early weakness for rotations back up again. Assuming we're starting off range bound, I just have this little gut feeling that we've been down here flirting with support now a few times, and we may very well see an attempt to take this lower. So we'll see if that develops or not. But employment situation could change everything out. Could run through support right down, and at that point bets are off. Same thing on the way up. Could be a nice reaction to the upside as well. So just wait for the employment situation to clear, settle in a bit, figure out what direction the market is trading, if any, and then let's attack it that way. Analysis is basically looking for early weakness to get long and down to that 59.15s. And that just hinges on that the employment situation doesn't totally screw everything up, turn everything upside down. All right, so bonds and the NASDAQ. Bond market weak. They were up here for a little bit yesterday. Now they're back down again. It looks like the bond market's trying to take this lower. It's been a reasonably orderly sell-off, but it is heading. Bond prices are heading lower. The yields are heading higher, and that's just how it looks like it's developing right now. So I would trade bonds on a short side, looking to sell strength at 112.02. The 12.06s, the 12.12s, rotations back down. Above 12.12s, I'll take off the short bias and go back range bound. If it starts trading above the 112.22s, I may actually start thinking about the long side, but that's kind of how we get started this morning on the bonds. Not going to be very aggressive on the long side until they take out either the 112.22 or you see 11.16 holding on a retest. But that's kind of the dynamic on the bonds. Looks to me like the general direction on the bond prices are down and yields are going higher. It's going to be some headwinds for the stock market when that happens. Or it's happening and the headwinds are coming, put it that way. On the NASDAQ, also setting up down here. They've been down. This is lower end of the range. This is the Wednesday trading, Thursday little baby day, and then right now we've been down here testing support at this 170s in the overnight, trading back up again. I'm still looking for early weakness, see if they can retest this low in the day session, and that holds. We may have a shot at trading back up again to the 21,500s. And that's the same kind of dynamic as on the ES, looking for that early weakness to get long against support down to the 170, maybe even down to the 130s for rotations back up. But we are down here at that lower edge already. So if they take out this 170, I would be a lot less aggressive buying, looking for a buying opportunity. One level outside the obvious would be the 130s. And if that comes out, bets are off. We are heading lower at that point. So that's how we get started on the way up. If they start taking out the 370s, I would go back range bound, looking for rotation back here to the 21,500. So that could be a nice long trade, retracement trade in there. But it all hinges on the employment situation and the reaction of it. What's that going to look like, and how we had to adjust based on what happens with that announcement. So big news day trade, same dynamic. You have a good example here on the NASDAQ as well. And that is big bar, balance bar. That's your news day trade right there. And then if it's a big bar and you have a balance bar, on the ES and NASDAQ, you can get some churn around the edges if you want to be a little bit more cautious about it. Usually the first direction out of that bar is the correct direction. The only problem with it is usually that if you get stuff like this back and forth, with additional volatility, it could shake you out of the trade. And I mean, as you see, the trade kind of worked in that direction anyway. It just had another leg lower in it. But this is not the news day trade. This is just a reaction. But it's a good example for what it would look like it's just a much bigger bar. So the bar needs to be like probably like 5-6 times the size of the regular bar, even more. So it'll be a big reaction, and it's not going to be by any means this is not a new state reaction. All right. So a much bigger bar than that, but directional, and then you have a balance bar looking for that balance bar, and then you look for direction. All right, so that's the Nasdaq. We get started. So everything hinges kind of on what the employment situation is going to turn out for us. On oil and gold, gold can quickly on that guy. They are up here flirting with the 2700s. They're up here testing these upper edges. That's interesting. So they took a leg higher. At this point, took out that resistance at the 2680s and are moving higher with a pretty good clip, heading up towards testing that low volume area at the 2717. So starting off from the long side on gold, looking to buy weakness at this point, 2702s, the 2698 to 2700s, 2690s. They trade below 2690s, take off the long bias and go back range bound, look for potential retracement back to that 80s. We might get the reverse retest on the 80s. That would be a pretty spectacular run. They're running right back down, reverse retest this breakout area, and that would be down here at the 80s. That would be pretty interesting trade, but I would be less aggressive buying it if they take out the 2690s. So 1, 2, 3 levels down. And right now we got a little bit of weakness right from the get-go, but I'll trade it from the long side of the market until they trade below that 82, and below the 90s I would be less aggressive buying it. All right, so that's gold heading higher. It's interesting. Oil though, it's a complete surprise. Here we go again. I can't figure this shit out. Why is oil trading higher? What's driving oil? Anyone's guess? We'll see. I mean, it's a definite supply demand of some sort is what's going on. And maybe because all this closing down these last ditch efforts they're doing to cut off production or kill production before they leave office. Maybe that's what's causing it. But this is a pretty good move to the upside on oil. And we are rolling after this 16th. I sent out an email about that yesterday. But trade oil from the long side at this point. I'm going to just fold it together. Looks like a move out of the middle to the upside to me. So trade it from the long side. And let's see where they're going to go. So I'm just trading this with a lot of caution because I can a hard time digesting exactly why it's doing what it's doing. So anytime the market feels counterintuitive like that and you don't have a good explanation, just trade it with a lot of caution. So at this point, looking to buy weakness against the ledge here at the 76s, against 75.75s, rotations back up. I would say below this 75.30s, take off the long bias, go back range bound. So looking to buy against 76, 76, 10 to 15. It's like 76 to 76.20 in this area. 76, 75, 65 to 75, and then 75.25s for rotations back up. And you trade below that 75.25s, look for take off the long bias and go back range bound. But this to me feels very counterintuitive. So if you have any idea why oil is trading higher, put it in the chat. Let's see what it is. But it's this one odd one. So that is oil. Trade that from the long side, gold from the long side. Back to the ES. There it is. And the ES is just in a holding pattern, just sitting here flopping around. So we got another 10 minutes or so before we get news. So we got a starting point this Friday. So trade things with some caution, wait for that employment situation to settle in, and then let's see what direction the market is likely to go on this one. Alrighty, guys, good trading, and I will see you back at 11:30 for the next update. Right, later.